Hello everyone, and welcome to AMC Lawsuit and Justice, Project Popcorn, the Scheme channel. My name is Ethan, and today is February 22nd, 2026 at 1:06 p.m. Eastern Time. And today we're publishing video number 24, and we're going to continue where we left off from video number 23, where it ended December 8th, the timeline of December 8th, 2022. So let's begin. Adam Aron may have reference to AMC's treatment of APEs as precious. If you watched the previous video during an interview with Yahoo channel with 3 interviewers, he called APEs precious. He's also stated APEs are precious in his tweets. In fact, AMC flooded the market with over 800 million APEs at bargain basement prices in less than 6 months. Technically, I think it was 4.5 months. Then on December 21st, 2022, when the AMC common stock closed at $5.30 per share, the APEs closed at 68.5 cents per unit. As noted, despite the two being functionally equivalent, the APEs traded at a deep discount to AMC's common stock. In response, the AMC board, in big air quotes, set out to boost the price of APEs while also increasing the company's authorized shares. It did so to the detriment and against the wishes of holders of AMC common stock. So let's go over the chart. We're now focusing what happened to AMC up to December 21st. So this is right here, before there's a gap up. So this move from the day it was launched, August 22nd, 2022, I'm going to move my mouse to the right. And all it did was go down. And then we're almost at the low right here. And then there's the Antara deal. So let's continue. So at a special AMC board meeting held on December 21st, 2022 via Zoom video conference, the following AMC board of directors were present. We had Adam Aron, Phillip Lader, Anthony Saich, Howard Koch Jr., Kathy Pawlus, Gary Locke, Lee Wittlinger, and Adam Sussman. Additionally, the following officers were present. We had Sean Goodman, CFO, Kevin Connor, General Counsel, and during the meeting, the board discussed a potential transaction with Antara, which had been introduced to AMC by Citigroup's our investment banker, Derek Van Zandt. Adam Aron explained that the company had raised approximately $162 million from its fall ATM efforts, but the APE price had fallen below $1, causing AMC to stop selling shares in the open market. Adam Aron also projected that the company would have approximately $750 million of liquidity for the end of the year, including $200 million in revolver. Next, Adam Aron outlined the terms of the transaction with Antara, explaining that the company, which is AMC, would sell $110 million of APEs to Antara at a blended price of 66 cents, a slight discount to the 68.5 cents it closed on that day. Antara would purchase 60 million shares today for 58 cents per share under the company's ATM program and approximately 107 million shares in 30 days after antitrust clearance for 70 cents per share, and that AMC would purchase $100 million of face value of AMC's 2L notes owned by Antara in exchange for approximately 91 million APEs, and then Antara would agree not to sell any stock for 90 days. However, Adam Aron neglected his fiduciary duties by failing to investigate Antara's true intentions and their potential involvement in short selling, which could harm shareholder value and violate SEC Rule 105. Disregarding these concerns, Adam Aron proceeded to present the Antara deal to the board. Adam Aron also told the board that AMC would schedule a special shareholder vote to authorize additional common stock such that the company's APE securities would convert to common stock on a 1-for-1 basis, and at which the company would also recommend a 10-for-1 reverse split. Per Adam Aron, Antara agreed to vote in favor of these proposals. Finally, Adam Aron explained that the resulting increase in liquidity to approximately $900 million would be very desirable, although he did not identify any specific need for the liquidity. On the surface, these actions may have appeared to be aimed at increasing liquidity to a favorable level of approximately $900 million. However, upon further scrutiny, it becomes evident that retail shareholders were guaranteed to bear the consequences. In reality, AMC did not urgently require liquidity in 2022 to justify the Antara transaction based on the false claims of raising cash to avoid bankruptcy. According to AMC's annual report, AMC had a cash position of $654 million on December 31st, 2022. Taking into account the cash generated through the ATM, the company would still have had approximately $425 million in its bank account. Now, what I just read, I want to go over with regards to converting AMC and APE and then doing the reverse split. Now, I don't know if you guys know, but APE and AMC are listed on the New York Stock Exchange. So now we have to apply the minimum price rule. Now, how did they get this game plan, or why would they do a conversion reverse split? If you watched our previous videos, let's go to the John Merriman email. And once again, here's the Daniel Meyer Transmittal Affidavit, and a good shareholder, an amazing shareholder, I don't know if he wants me to identify him, reached out to me and asked me who's Daniel E. Meyer. And this guy seriously brings good luck to us. Every time I call him, something good happens with regards to what we're doing behind the scenes, so I keep calling him. Anyway, he asked me a good question. Who's Daniel E. Meyer? And I think we addressed it in the first video. He was one of the attorneys that allegedly represented us in Delaware. And I forgot what law firm. I think it's in BLBG. And he drafted this document and filed it on May 4th of 2023 with the settlement brief. And we were privy to this on May 20th of 2023 because several of us filed motion for discovery. So the gentleman that we always refer to, the Daniel E. Meyer Affidavit, he's an attorney that represented us out in Delaware, in the Delaware Chancery Court, consolidated class action lawsuits, specifically, 2023-215 MTZ, and MTZ represented the initials of Judge Aron. So let's continue. So this exhibit is number, I think, 19. Yes, it is. And this is the John Merriman email, one of the most important emails. And John Merriman worked for Riley Financial, and he sent an email to Sean Goodman, John Merriweather, and then he CC'd his attorneys and colleagues. And attached to these emails were 3 prospectuses for 3 stocks that were listed on NASDAQ. And we had OPGN, AVGR, and AGRX. And all these 3 stocks, at the time the email was drafted, were down a lot of money. And all they did was move forward with preferred reverse split conversion. And what John Merriman is telling them, read the prospectus, let's meet up and confer. Because AMC is listed on New York, they don't know if it will work. But they already set precedents on NASDAQ. So they already knew that if you move forward with this, which they did, where they pivoted from a rights offering to an ATM, this is what they were going to implement. They were going to use the preferred and then do a conversion and then reverse split. And all these 3 stocks have all tanked. For example, let's see a chart. We could look at OPGN one more time. And look at that. This was, what day is this? So we're looking at May. So this is the reverse split conversion they did in the past. Hold on, where am I going? Let me go back further. Let's see this. So at the time this email was drafted was May 27th, 2022. And they're sending a prospectus. And this was the prospectus. It went down from 100 down to at one time $1 actually got delisted, and now it reappears, I think, on OTC. So imagine exactly what we're emulating. Let's go to the next one, AGRX. And let's go to, at the time was May 27th. And they already did a conversion, and all they did was go down. Let's see. And then AVGR. Once again, let's go to May. Oh, there's the, all right, sorry, let's go back here. And here we are. It did a reverse split, and all it did was go down. Now this is also a reverse split. Again, 1 for 15 and go down. So imagine. So here we did the reverse split, it goes down, and then they have to do another reverse split, which seems like AMC is going to emulate. So imagine, they knew what's going to happen. All right, so let's go back. So that's why the John Merriman is one of the most important emails. They had 3 stocks that they implemented, the same scheme we went through, the preferred reverse split conversion. And at the time, APE was trading at 68 cents, and AMC was at 5.30. And if they're converting it, what makes it seem that, let's address this question. Since AMC is listed on the New York Stock Exchange, what is the minimum price rule? So a company is considered non-compliant if its stock price falls below $1 per share. The dollar must be maintained at a 30 consecutive trading day average. How do you cure it? If the company generally has 6 months to regain compliance. To cure the deficiency, the stock price must close at $1 or higher and maintain a 30-day average of at least $1. What happens if it doesn't recover? If the company cannot organically raise the price above $1, it will often implement a reverse stock split to increase the per share price. If compliance is not restored with the cure period, the New York Stock Exchange may begin delisting proceedings. Say APE was trading at 68 cents, but if we're now converting it and merging it, what's the point of doing the reverse split? It wasn't going to be under $1. And we're not even under $1 now. So they just took the playbook from the 3 stocks, OPGN, AVGR, and AGRX. And once again, it's very important. I showed you the 3 charts. AVGR, I think, did multiple reverse splits and went down. And I think AMC is going to emulate it. If it breaches $1, they'll probably let it linger there and then force a reverse split. But you never know what's going to happen. Anyway, what we do know is that it went from a high of $72 down to 12 cents. And that's a result of the scheme called Project Popcorn. So let's continue. Following Adam Aron's presentation, the AMC board discussed the transaction. During this discussion, Adam Aron outlined the voting dynamics for the special shareholder meeting, indicating that they were presently considering more APEs in the float than common stock, that the APEs presumably would all want to convert, and that the non-voting APE shares would be voted proportionally rather than as no votes. So they were already discussing to show that APE shares had more power, meaning if the APEs didn't vote, it would mirror what was the percentage. It wouldn't be considered as no votes. So all of which factors gave AMC a good chance to secure approval for conversion. Thereafter, the directors noted that Antara might enjoy a windfall if the APE price increased, but ultimately noted that AMC benefited too if the price increased and that there was no assurance that the APE price would rise or convert. Next, Adam Aron indicated that one risk was if the retail investors were upset by the transaction and began selling their shares, causing the price of AMC equity to decline. Nevertheless, at the close of the meeting, the AMC board and Adam Aron approved the forward purchase agreement. Now we're going to pivot. There was an attorney named James West Christian, and on behalf, so let's begin. On December 21st, 2022, James West Christian, an attorney representing Naked Truth, drafted a cease and desist letter directed to Adam Aron, dated December 21st, 2022. The letter was sent certified mail return receipt with the following tracking number, and I'll show you in the image. It's 702-103-5000, 537-69545. And according to the United States Postal Service tracking website, Adam Aron was served with West Christian's letter on December 30th, 2022 at 2:23 p.m. Now, Mr. Christian's letter reads in part. So let's open it up. And here's the letter. You can see the certified mail return receipt, the date. It's for Naked Truth, West Christian, and Levine. So I'm going to use the magnifying glass. And basically, you see the letter's addressed to Adam Aron, and it's signed off by James West Christian. So it goes, Dear Mr. Aron, our firm represents several officers at Naked Truth, the clients who own shares in AMC, the company. According to our clients, you have issued a press release stating that there are no phantom shares of the company in the marketplace. Our legal team and experts have done due diligence on over 70 public companies over the last 20 years. After reviewing the public available data, we believe the data indicates that the company most likely has a large number of phantom shares of the company in the marketplace. As such, we hereby demand you take immediate action to determine the number of real versus phantom shares by hiring Share Intel, a shareholder intelligence company who has patented software and methodologies that will determine if the Wall Street community has in its possession phantom shares of the company or not. In the event you elect to not take this action on or before January 28th, it will be our obligation to hold the company accountable for what we believe is fraud on the company and its shareholders. So now let's move to December 22nd. So now on December 22nd of 2022, AMC announced that it had, through a series of transactions, sold or agreed to sell a little over 257 million shares or units of APEs to Antara at a weighted average price of 66 cents. AMC filed with the SEC a Form 8K current report where the company announced that it had entered into the forward agreement with Antara, pursuant to which AMC would sell 106 million shares of APEs to Antara for an aggregate price of $75 million, and then simultaneously purchase from Antara on a private basis 100 million aggregate principal amount of the company's 10/12% cash PIK toggle second lien notes due 2026, the exchange notes, in exchange for a little over 91 million APEs, together with the forward purchase agreement, the private placement. AMC disclosed that immediately prior to entry into the forward purchase agreement, Antara purchased 60 million APEs at a price of 58 cents for $34.9 million through the at-the-market program. Now, in the December 8th 8K, AMC further disclosed that within 90 days, it would hold a special meeting of stockholders to solicit stockholder approval of amendments to the certificate, which was slated or scheduled for March 14th, 2023. And the two proposals were to increase the number of authorized shares of common stock to the number at least sufficient to permit the full conversion of APEs into common stock, and then effect a 10-for-1 reverse split of the common stock. Per the company, Antara agreed to vote all its holdings in favor of the amendments. So the final results and execution of the APE ATM offerings reveals a clear contradiction in Sean Goodman's July 20th, 2022 memorandum. Despite market conditions that could have allowed the AMC board to sell APE units at higher issuance prices ranging from $7 to $10, they deliberately waited several months until APE was trading below $1, a point where it had become a distressed asset, before initiating the sale. This decision was in line with Project Popcorn's strategy, which aimed to maximize influence in securing votes. According to a December 8th, 2022 email from Derek Van Zandt, Antara had $190 million to invest. By entering into an agreement with Antara LP at 66 cents per share rather than 8, AMC secured 275 million shares, which translated into 275 million votes. Had they sold the shares at 8, Antara Capital would have received only 23.75 million shares, resulting in just 23.75 million votes, far fewer than what was required to manipulate and rig the outcome of the March 14th, 2023 vote. SEC filings confirmed that the average selling price of APE in 2022 was $1.10. Then on December 22nd, AMC and APE opened at, so let's first look at what happened on December 21st. We stated this before. AMC closed at $5.30, and APE was at 68.5 cents. As a result of the news, this AMC gapped down or traded down to $4.14, while APE closed at $1.23. So the APEs almost doubled from the previous day's close to 68.5 cents. Remarkably, Antara Capital has never been out of the money with their December 21st, 2022 APE investment, the forward purchase agreement with AMC. So let's just go see the chart. Let's type in APE again. And this represents the day the transactions announced. So all it did was go up. Now mind you, it's going to trade up and gradually go up to 3. And what happens when it goes up to 3? The APE price? Antara could start liquidating, and they did that on purpose because they didn't want APE to run. So they said, yeah, hold it, you're guaranteed a vote, and what's it called? Now, mind you, February 8th, you have to have owned APE shares in order to sell. So it breaches the $3 price, the $3 price. What day again? On February 3rd. Then February 8th, they probably started selling. They had to start only selling then because you had to have owned the shares up to February 8th. If you sold shares on February 7th, you couldn't vote. So imagine, the timing is impeccable. And what happens after that? Stock only went down. Right here. So February 8th is the last day you could, you had to have owned the shares up to February 8th in order to participate in the March 14th, 2023 vote. And then because it breached $3 here on February 3rd, 2023, Antara was able to start selling it. And what did they do? They cashed in their profits while still being able to vote. Unbelievable. Anyway, that's it for today. I hope you're enjoying the videos. If you're learning something, that's great. Please share and let other people know about these videos as well as the channel. We need to grow faster because we need more people to know, because at the end of the day, once we file suit, I want people to know what exactly happened. Anyway, with that said, have a good week. Once again, it's February 22nd, 2026, 1:27 p.m. Ciao.